Everybody survived the traffic? Wow, that was something else. Anyways, thank you for being here. My name is Jack Thompson. I run the Guild Mortgage Company for this part of the country. Glad to be here. Used to live here. Love El Paso. Glad to be back down. But I want to introduce our great loan officers here. We got Aaron Barber right here. What is your name? Oh. Randy Cabrera and Sandy Johnson. Great loan officers, been in the business many, many years. They got a lot of great support. They live here, they work here, their kids went to school here, all of that. So I hope you guys get a chance to get to know them better and refer them some business. And then standing in the back is their sales manager, Robert Sanchez. So hi, Robert. It's okay. Thanks, you guys. So we're gonna give you a little class today by a fellow Guild person named Bruce Anderson. He and I have worked together for, I don't know, 15, 20 years at two different places. He is in my opinion, the most foremost expert at reverse mortgages. He's great because he knows that clientele, the elderly clientele, 62 and up. He knows how to work with them and their families and answer all of their questions and set them at ease, because getting your mind around a reverse mortgage or getting a mortgage that has no payment is difficult for a lot of people sometimes. And he can explain all of the nuances to that. And then inside the reverse mortgage program, which he's going to show you, there are lots of different ways that he can financially help and save families and keep people in homes. And finally, he can show you how to use a reverse mortgage on how to buy a home or sell somebody a home using a reverse mortgage. It's a pretty cool little product. So do you guys have anything to say? Or, well.
Food will be here shortly. So Jackie from Rosewood Time was sponsoring our lunch today. And so you'll probably hear her coming in and out. But you know, if it's okay with Bruce, we'll give her a few minutes to kind of introduce herself and speak. But of course, if you have any questions for any of us, feel free to approach us afterwards. But we're so happy that you're here.
Yeah. Anything else? Okay. All right, Bruce, you ready? And when Jackie gets here, we'll bring her up and let her say hi. She is providing us some food. I know we have some hungry people in this audience, so we got to feed them. So with that, thank you for being here. If you have any questions, feel free to ask away. This is a really cool product, so take the time to learn it. Take it out if you know people that are over 62, people that want to stay in their homes, things like that. This is the product to have. And I can tell you, my in-laws, I put my in-laws on a reverse mortgage. Bruce did it, actually, for them. And they were able to buy a new house because they wanted to downsize and use the reverse mortgage. They had no payments. And they lived there for 4 years. We're in the process of moving them now to assisted living. But the reverse mortgage allowed them to stay in their home, independent, for over 4.5 years, where I don't think that would have been the case in their old house. And there's many other stories that I could tell you. He also did one for my aunt. I'm a big believer in this product because it allows people to stay home and live in dignity. So with that, Bruce, it's all yours. Thanks.
Okay, this is a first for me. I don't think I've ever been wired before, so they're recording as well. Okay, so when we get to questions, we pass around microphones. I don't know where the camera is, but it might travel as well. So being wired would give my kids a new definition. I think they'd come up with a lot of interesting information. But, okay, with the reverse mortgage program, so Guild Mortgage is a direct reverse mortgage lender, okay? We do everything. We do the originations, processing, underwriting, closing, funding, and servicing, okay? And usually I'm here to represent the reverse mortgage division on behalf of our 3 loan officers here, okay? So if you have questions or if you have a potential client that you want to talk to or have go through them first, and then they'll contact me, and then we'll connect. They have the option of turning the client completely over to me, and I'll handle it. It'll be in their name. The loan volume will be theirs as well, okay? And their customer, and they'll remain in their customer base. So I'm here basically to assist the loan officers here, okay? So you'll see their information up front. all the way down in the very bottom on the left-hand side is the flex payment mortgage. So Guild Mortgage thought it would be a good idea to rename the product. All it is the reverse mortgage. It does have a different name to it for Guild. It was approved and went through compliance and all that kind of thing. So, but essentially it is a reverse mortgage. And the reason they did that is because what you want to do is you really, if you're talking to customers 50% of the time, they're going to say, no, I don't want, I've heard bad things about that. Okay, we're going to clarify some of these things today. Okay, get into some more details. We're going to really focus on the purchases. I'm more than happy to go into refinances, but essentially it's a very similar product. But the purchases really are what you're interested in. Okay, so we'll cover that first. And if you have questions, I'm certainly going to hang around and answer any questions for you. Okay. This is a little information about me. I am the only CRMP in New Mexico. In Texas, there's 2 of us, I believe. I think there's somebody out of San Antonio that's certified reverse mortgage professional by the National Reverse Mortgage Association. I earned that in 2010. Then I did the reverse mortgages in 2006. That certification is continuing education, something I have to complete every year to keep that current. And I've been doing this for over 20 years. I was in the very first class when they offered this. So that was 2010. There was 13 of us. Now there's about close to 200 of us doing this and with this information. Okay? So we're going to get into this. And really, why should you care? I mean, I think we're going to give you some pretty good information. You probably have some cash buyers that are seniors that may or may not want to put all that money down in cash. This is a very solid alternative for them, okay? And we'll point that out, okay? Reverse mortgage, the original product was FHA HUD. There are some additional products out there, but the mortgage insurance is provided by FHA and HUD, and the guidelines are provided by FHA and HUD. So when you hear HECM, that is the acronym, Home Equity Conversion Mortgage, okay? And basically, it may fit. Minimum age is 62. I think that's going to show up a little bit. We'll go into show how the structure works as far as the purchasers are concerned, okay? How partnering with us can be very advantageous. Like I said, we're a direct lender. We're in the top 10. I think we were 6th or 7th. We just moved past whoever was ahead of us. So we're getting close to the top 5. Important statistics that I think are very important for people dealing with, in this age group, is essentially 11,200 people in the United States turning 65 every day, okay? And then I think the last statistics, age 60 to 78, largest group of home purchasers. That's been true for 24, 25, and I'm going to assume that's going to be the case for 2026 as well. Okay, so I'm not sure if you knew of that statistic. That does come from the National Association of Real Estate Agents. Okay. What is a reverse mortgage purchase? Okay, loan available to homeowners typically 62 or older. They're able to buy a home. The key benefit here is that there is not a monthly mortgage payment. We'll go into when the loan is paid off, but essentially the loan becomes due and payable when the homeowner leaves the home or passes away. We can go into answer lots of questions with that, okay? But let's move on a little bit. So no monthly mortgage payments. The agreement is that basically is their primary residence. You cannot do this on a second home or a rental investment property. It has to be on their primary residence. They have to maintain their property taxes and insurance, and in some cases you'll have homeowners association dues as well, okay? The loan is, now, they don't necessarily have to pass away. I mean, technically, as Jack mentioned, you know, I did some for his in-laws. They're getting up in age. They're going to need a little bit more medical care, so they're going to sell the home, pay the reverse mortgage off, pull the equity out. which is key. A lot of people think that once you do this particular product, you sign the house over to the big bad bank or lender. That's not true. The homeowners own the equity. It is true that the loan balance has an interest rate on it. It does grow, so it does use some of the equity. But in my opinion, that maximizes the retirement when you're using home equity as well, okay? It's still a mortgage. It's not a sale of the home to the bank. And borrowers keep their name and title and so forth, okay? It is just like a regular mortgage. Some of you may have had this come up. I get calls all the time from real estate agents. I have a house I need to sell. I need to look about listing it, okay? But it has a reverse mortgage on it. What do I do? It's not a whole lot different. The homeowners get a monthly statement. They're going to have a balance of what the reverse mortgage is. So what you want to make sure is there's equity in there that they can sell it. Could be the heirs that may be calling you. Could be that the homeowners have passed away already and they want to sell the home, okay? So what you want to do is get the information on what's owed on the house, do a market analysis, and make sure that it makes sense to sell, okay? And that's it. The only difference is once it hits the first of the month, it is an FHA loan. So on FHA loans, interest is charged one time, and basically that's the payoff for the entire month, okay? So when it hits the first of the month, that balance is going to go up slightly, so you need to be aware of that, okay? Reverse mortgage for purchase concept. We'll get a little bit of advertising here for us. Again, I said it's designed for home occupied primary residence only. The down payment is certainly higher, okay? The way the reverse mortgage works on purchases, okay? It's the only thing you need to know. If you have somebody that's interested in this, the value of the home, their age, where the current interest rates are right now, okay? And we're going to come up with a percentage of down payment. Doesn't make any difference what the price is. That percentage is going to hold true for any price. They are going to have that down payment, obviously, okay? And so it does require a pretty significant down payment, but instead of paying cash, you've got some people out there, you could pay cash. The only other way you get a home with no monthly mortgage payment is to pay cash. On this particular case, they can come in, depending on their age, they can come in with 40, 45% down, and the other 55 they could save, and they could have more money to work with in retirement. So that's a key benefit there. Okay, let's see here.
Can I give an example?
Sure.
So,
I can't say no to him, by the way, so.
just to put it in terms of you all, is that we've got clients that come in and they may be looking to retire, buy a retirement home, or downsize, or move to where the kids are, things like that, and they sell their big old home or where they may be, and they got a lot of money. They may have 400,000, 500, 600, whatever they may have, on their deal, and their thought process, well, we'll just buy a small home, call it like that. Well, the nuance of that is that they just moved their equity from one house to another, but they didn't have a chance to improve their life. And so what we're seeing now with Bruce counseling is people will come in and say, I was looking to pay for the house, pay it off, and just buy cash. But what I'd like to do is keep some of that cash. So maybe I'll just maybe I have 600,000 to work with, or 500,000. I'll put 200 down, 200,000 down, 250, and I'll keep the 250 to sell the house in their bank and have that to live off, and improve their life, or take vacations, or pay for a grandson's or granddaughter's college, or something like that. There's so many different things that you can do with this. That's why it's so important to understand that as brokers, when you're talking to people in this age group that are selling their property for retirement, find out how much equity they're, if they're looking to pay cash. I know it's like cash is great, because it closes, or I worry about the mortgage, it's fast, I understand that, but you might really improve somebody's life by just having them have a conversation with Bruce, and they can run the numbers and say, well, we can do this, you don't have a mortgage payment, and you can get to keep all this money, and it'll improve your life. So that was just, I kind of
Okay.
one way was trying to.
Okay, thank you. I'm not sure if I'm supposed to turn this off when he comes in. Not really sure, but hopefully the camera still worked on that. Okay, who is a potential fit? Homeowners who want to right size. We have a lot of people this age that may have 2 stories. Their home may be too high maintenance. They may have pools, whatever it is, they can't take care of it anymore. So they're downsizing, moving closer to family, better climate, but they're concerned about taking a monthly payment on and moving forward in retirement. So if they have the down payment, this will help them, okay? Buyers who could pay cash but rather keep more assets invested somewhere, that's a key option as well. To me, with this program, whether it's a refinance or purchase, it maximizes your assets available going forward in retirement, okay? Increase their purchase price, that's another thing you can do. If for some reason they've got $400,000 to put down, they can't find a home they like at $400,000, they certainly could buy that bigger home and still have no monthly mortgage payment, okay? And possibly not have to put all that $400,000 down, okay? All right, let's go into this example first, okay? Home buyers age 76, this is actually one that I closed within the last year, okay? In fact, I was down here not too far away, it was in Las Cruces. She just completed a divorce. That's happening more often than not with people in retirement, believe it or not. So in this particular case, I've had a couple of them. I've seen several of them in the last couple of years. She went through a divorce. She had sold her property. Her and her husband sold her property. She had $375,000 available for a down payment, okay? At age 76, at that particular time, she needed 57% down payment. For the home purchase, she was only buying a home at $279,000, okay? So what that does is she had to put $159,900 down for that purchase price. So she buys a home for $279,000, putting $159,900 down, no monthly mortgage payment, and she gets to keep $215,000 in the bank. Okay? Any questions on that example? Okay. Example number 2. This particular case, the divorce was not finished. Okay, this was a couple up in Santa Fe, and they had quite a few assets. And I think the husband ended up giving her $20,000 a month, and you know, basically for like 10 years. But in any case, they sold assets. They sold a home they owned for 10 years, received $430,000 for that sale. She's age 71. She bought a home up in Santa Fe. It was new construction, 606, almost $607,000. At age 71, she needed 63% down at that time, okay? So she had to put $383,000 down of that $400,000. So basically, she buys that almost $607,000 home, puts the money down, still keeps $17,000, okay? Now in this particular case, it was a little more challenging because the divorce was not complete. So what that means is the husband, who was actually very cooperative, had to sign a few. He wasn't going to be part of the home transaction, wasn't on the mortgage, but because the divorce had not gone through, he still needed to know what she was doing, okay? And we had to reassure him that he's not responsible for the mortgage, he's not entitled to this house, but because the divorce hadn't gone through, he had to sign a few things that paperwork that we had to take care of closing, okay? Example number 3, so this is going to get into the numbers, okay? So, as I've said, the interest rates have an impact as well, and I'm sure you're all aware of where the current interest rates are. The FHA HUD product is an adjustable rate product. It's the only one that makes sense at the moment. There is a fixed rate, which we show as comparison, but it's 8.5%. And at 8.5%, you don't nearly get the impact you do with the adjustable rate. Okay, so the loan amount is larger on that calculation. Okay? Everybody remember when the rates were down at 3.5%? Okay? When they were down at 3.5%, if you were age 65, you only needed 50% down with this product, the FHA HUD product, okay? Because the interest rates were so low. Now they're at 6.625, so now you got a big difference. You need another 20% down if you're only 65. So there's no question where the rates are right now. It's a little bit more challenging when you're in your 60s for this product. Most of our customers are in the 70s and 80s. Did you have a question, or?
Yes, dear. When it's a couple and one is younger than the other, you go with the older persons?
The younger.
The younger person?
Yes. Yeah. Yes, we go with the youngest age, and it uses an age expectancy calculation.
And it doesn't matter if it's male or female?
No.
It's whoever is younger?
Correct. That's correct. Okay, obviously, at age 75, so 10 years later, that down payment is less. At age 80, you're at 58%. Now, Guild does have some alternative programs, and I'm actually working on a few of these at the moment, and it's called the Platinum Peak. The downside for that is the rate's a fixed rate. It's 8.99%. However, you're going to see the difference. I'm going to go back and forth. The difference on the down payment, 64%, 70%. Okay? So not only are you going to, it's certainly going to be a higher interest rate. It's a fixed rate. It's not going to go up and down. It is capable of being refinanced later on if you choose to, probably a year later, if the rates come down. But right now, that would make a big difference between somebody being able to afford the money. Okay? Right now, age 75, 57, 63, so that's about a 6% difference, and again, about a 5% difference in the fixed rate as well. We have the title company here.
Yes.
Hi, do you want to come up and?
Come up and introduce yourself and say hi.
I think she's going to need a mic, whoever has.
There you go. Where was it? There it is.
I have a question. How long does the mortgage last for?
The mortgage is due and payable when the homeowners decide to leave the home or pass away. And I can get into more details as soon as we're done with the purchases. Okay? Hi, Bruce. Nice to meet you.
Hi, everybody. Good afternoon. You know you're in El Paso when you're trying to take every roadway and there's construction everywhere. I think some of you guys encountered that because I may have seen your cars on the freeway. We're sponsoring lunch, so lunch is served. So we've got some fruit and some cookies and sandwiches back there. Want to thank the whole team from Guild for allowing us to come in and present ourselves. Most of my team right now is in closing and holding down the fort at Rosewood Title. I know a good bunch of you, Miss Patty there. I've known her for many years, Randy, and then some of the good team over at Guild Mortgage, and so you guys are in great hands. Just a little on Rosewood Title. We are an independently owned Latina title company, the only one in town right now. And so that's a really big deal to us because the majority of title companies are male dominated. Nothing's wrong with men, right? It's great. But for someone, a minority owned company to break through, that's a pretty big deal. And so my dad was in real estate, so I understand exactly what you all encounter, right? You're not just a real estate agent, but some of you are contractors, therapists, gardeners, cleaners, movers, and maybe even funeral, you help with funeral arrangements and stuff. I've heard agents say that too. And so just know that your work does not go unnoticed with Rosewood Title. And so for that reason, we take a lot of pride in what we do because you put in so much work, right? And especially in this market, it's even more valuable who you work with because the market is so difficult. We've seen 5 contracts come through and each and every single one of them canceled. And so we do our best to work with you all. I know right now, sellers, how many of you have had your sellers upside down when they come to closing? How hard is that? And so we do work with the agents. If we see you cutting your commissions, we lower our escrow fee as a way to help because we see you all doing it, right? And we understand that that might be your only contract for 3-4 months, and by the time you separate it out, it doesn't come down too much, right? And your sellers also need a hand up. Sometimes they're in a really difficult situation, And it is what it is. That's just life. And so we know life. We get you. We understand where you're coming from. And so give us a try at Rosewood Title. We have our cards there on the back. One of our escrow officers is Brenda Vidal. She's been in the title, I want to say 40, 45 years. Do not guess her age. She was very, very young when she started. And so I've got about 20 years in title. I was with one of the top Lone Star Title, one of the title companies, for about 11 to 12 years. And so I got to cut my teeth with them. And a lot of them that raised me and mentored me are no longer in title because they are now retired. And so it's time for the next generation to jump in and take over, right? So please trust us. Give us your first contract. Try us out. Our hours are from 9 to 6, and you can get a hold of any of us there at the office. Come by and stop by as well and visit us. We're at 2004 Montana, about a block away from Cotton. Thank you.
Okay, I assume since the food's here, you probably want to get the food and get started on that, and I'll be happy to continue this after everyone gets their food, okay? Would that be a good idea? Can you do that? I don't know if everybody wants to go there back at once, but the food is here, so help yourselves, and we'll continue this in a minute. If you did notice, there's plenty of food back there, so if you need more, help yourselves. When we're done here, if you want to grab some on the way out, the title company said that would be okay. All right? Okay? Okay. All right, so remember, this is recording. Any questions so far on what we've covered on the purchases part? No questions? Oh, yes, sir. The numbers would have to work. They would have to qualify, ratios. Correct. It'd be a complete refinance. It'd be another loan. So it would take it out of the reverse mortgage? Well, basically, you're going to take the value of the home, wherever that current value is, okay? Then you're going to take that loan balance on where that is, and if the numbers work on the lower program, which would be the FHA HUD program, then you would go ahead and do that, okay? But again, the interest rates would probably have to come down some.
There's no income qualifying. I think that's what you're kind of heard about the Exos. We don't look at
I'm sorry, maybe I didn't hear that part.
Yeah, what I was thinking, what I was concerned with, if I'm talking to a client and I say, right now, you know, this client might be program at 8.99. 3 years from now, market changes, we go down to 4%.
Right.
Okay, but we've got someone that's on limited income, and they're in a reverse mortgage program. So, if I understood you correctly, to refinance, it takes, they're basically purchasing the house.
Right.
On a new rate. It wouldn't be just reevaluating their fixed rate mortgage on the reverse mortgage.
No, that's correct. It would be a complete refinance, and you would have to have some equity to use in there for it to make sense. Yes, sir.
So just to clarify, I think he's talking about income, the buyer or the owner not having to show income to qualify for the loan.
He would have to show income in most cases. That peak particular program, if your credit scores are high enough, you can use a stated income option as well.
Is this program credit and income based?
The peak program, yes. The FHA HUD program is more flexible. It is not based on credit scores, and we have some flexibility as far as their credit is concerned. Most of it has to do with the refinance on purchases. You're a little bit stuck because you're limited with how much of a down payment they're going to need for the most part. Yes, I would say yes to start with. There are some situations where you could do a stated income if the credit scores are high enough, okay? This is a fairly new program, and that stated piece is a very new program, okay? So we'd have to look at it and do some research on that, okay? Yes. So there's income credit qualifications. It's a little more flexible. Like I said, we don't look at credit scores. We do look at the last 2 years' credit history. If they had a home before, we really look very hard at property taxes and homeowners insurance being paid and the homeowners association dues on time. That's a qualification, and basically on every reverse mortgage that we do, we look at that history, okay? There's extenuating circumstances, and we can prove that, whether it's medical issues, death of a spouse, something like that. We have a lot of flexibility with that, and we can do quite a bit that conventional cannot do because they'll look at credit score only. Okay, does that help? We can get into a little bit more detail on the refinances and how that part works in a little bit, okay? Any questions on the purchase part right here, okay? Here's an example on how you can buy a larger home, okay? Current buyer's age 70, it's $400,000 in cash from the sale of a previous home. Can't find anything in the price range and doesn't want a mortgage payment. So basically with a reverse mortgage program, they can qualify up to $625,000 home purchase. And basically at age 70, let's see, well, I didn't put age 70 on there, but basically you're gonna need somewhere between 60, probably 67% down payment on there, okay? Which with 400,000 you would have, and you probably have a little bit left over as well. The FHA HUD program does have a home value limit on it, and it doesn't follow regular FHA guidelines. It goes up every year. The current home value for the FHA HUD program is $1,249,125. Okay? There are some alternative programs out there. That Flex program goes down to age 60, and that particular program will go up. We've done loans as large as $4 million. So you can get into some pretty big homes as far as that's concerned. Okay? All right. Reasons for seniors buying. We've covered some of this as well. Move to a more desirable climate, right size into more suitable home, move closer to family and friends, purchase a dream home. In some cases, they may want to buy a larger home that they're more comfortable in. Homeowners who want to right size, again, buyers who pay cash but rather keep more of their assets, increase the purchase price range without adding monthly mortgage payments, clients selling a high equity home and moving to a different market or where the price of the desired home would be otherwise force them to make a payment, okay? There's plenty of options when it comes to this particular one. Let me go into some of the benefits now, and I'm going to go into some of the qualifications as well. So some of you are probably wondering what happens when the homeowners pass away or decide to move. Okay, in Jack's example, his in-laws are going to move because they need more care. Okay, so they're going to sell the home. Remember, they own the home. So they're going to sell the home, they're going to pay off that mortgage balance, pull the equity out, and then they're going to go into a more, where they can get more care facility, okay? The only option there is to sell the home. You cannot move into a facility because you have to live in the home. It's your primary, it needs to be your primary residence. Once a year, the servicing, in this particular case is Guild, you have to verify that, yes, I'm living in the home, and we, all mortgage companies have ways to check on property taxes and insurance and so forth, okay? But once a year, you basically have to answer that questionnaire, okay? If, for some reason, remember, we lend based on age expectancy, okay? So what happens if you outlive that age expectancy? Okay? Has anybody thought about that while we're talking about this? So you buy the home, all right? And let's just say you're 75, 80, but you live to be 95, and that loan balance is increasing. Remember, you own the equity, okay? What happens if that loan balance gets to this part or gets very close to the value of the home, okay? On a purchase price, As long as you satisfy the agreement on the purchase program, as long as you satisfy the agreement, you're paying your property taxes and insurance, the mortgage insurance is going to guarantee that you get to stay in the home. You are not getting kicked out, okay? That's why you pay the mortgage insurance. It goes into FHA and HUD. They take care of any of those homes that are going to go upside down, okay? If you do go up, you know, if it does go upside down, they're safe. That's what this program's designed to do. It's designed to have homeowners stay in their home, okay, as long as they possibly can, okay?
Is that for both parties, both the wife and the husband?
Yes, okay? Typically, normally, I would say 8 out of 10 times, you're going to have borrowers who are both over the age of 62. So the same guidelines apply. Doesn't matter. They're both on title. One passes away, nothing's going to change with the loan. Okay? The other key benefit that I believe in both of these programs have this, on the Platinum Peak program, there is not mortgage insurance. So on the FHA HUD program, it's a little bit more expensive. It's 2% of the value of whatever the home is going to be. So that's taken out. It's not collected up front. It's rolled into the loan. What it does is it provides protections. And has anybody in this room heard of a non-recourse loan? There we go. Okay. So what that means, and I'm going to go back to the last recession a little bit. Everybody remember? Well, not everybody in this room is going to remember that, but 2006, I was still doing conventional loans at that point. Home prices were going up. We were doing crazy stuff, 100% loans, 80-20 loans. So you got the home value here, you're lending very close. And all of a sudden you're in a recession and the home price dips below, okay? Nowhere in that paperwork does it say that you can only pay this loan back if you can sell the house for it. You signed on the dotted line, you owe that money, okay? So if you happen to sell that house, you're going to need to come in and pay the difference off because you signed on that's what you owe, okay? If for some reason you're deciding not to pay that, on a recourse loan, the lender can essentially go after your other assets if you have them. On a non-recourse loan, that's not what that means. So everybody's seen the commercial on Tom Selleck when he says the home will always satisfy the debt. That's what that means. Other assets are protected over here, okay? So if for some reason you're in there, you buy the home and it goes upside down, you're still there, and both borrowers are gone, whoever the heirs are gonna take a look at it and they're gonna say, okay, well, or maybe they're gonna call you up and they're gonna say, how much do you owe on it? It's here, the value of the house is here. It's not gonna make any sense to sell it because they're not gonna be able to. There's not enough money there. The heirs or the estate of the homeowners could have enough money to pay the balance of the difference or that whole thing off. It would not have to be used. Okay, so in my mind, that's the key benefit also along with the no mortgage payment. Because what that does is that maximizes your home equity, okay? And it's gonna protect your other assets. Any question on how that works? Okay, so essentially what would happen is the heirs are gonna have 6 months up to a year to try to figure out if they can sell the home, okay? If it's upside down, they can't sell it, okay? There is one provision on the FHA HUD program where if it is upside down, they can buy it at 95% of what the current appraisal value of the home is. That would have to make sense. Doesn't matter how much upside down it was, it would have to be a direct heir, okay? According to however the homeowner's will or social is set up, okay?
So if they're upside down, the heirs are not responsible for that.
Correct. That is correct. Okay. Yes, sir.
Real life example, real life. I have some relatives, believe it or not. They're not in the zoo. But the mother had a reverse mortgage, and she stayed in the house a really long time. She's still alive.
So what they do is they basically petition the servicer, say, hey, listen, there's no equity in here. We really can't sell it. We don't want to keep it in the family. So we're going to sign a deed in lieu. We're just going to sign the house over to you. We're going to close everything out, okay? And have you take the house over, okay? Any particular questions on that? Yes, sir?
You mentioned that they have to be updated with their property taxes and mortgage.
Correct,
Period.
correct.
What happens when they can't say or the property taxes?
They're going to get some flexibility on that. I mean, I've been doing this for 20 years. When we first started to do this back in 2006, we didn't, well, that's true, but we also did not do an income evaluation either. And we didn't do a credit evaluation. It was almost a stated type income. I mean, we did some crazy things, paying off late water bills and all that kind of stuff. Well, when you don't do that, you don't evaluate their income. So you don't know how they got into that spot to begin with. Okay, well in 2015 they changed it all, so now we do income valuation very similar to a VA, which is a residual income. We want to make sure that they can afford to stay in their home, okay? One of the very first presentations I did in front of a group of real estate agents, this guy got mad at me, and this was the very first time. I hadn't done this very long. You know, I've had a year or so experience. He goes, well, I had a friend of mine who did a reverse mortgage, pulled out a bunch of money, and went to the casino and blew it all. And it was like, it's my fault. I mean, you know, what are you going to say? So now we do have some restrictions on income qualifications. We want to make sure they can stay in their home, they can pay their bills, they can buy food and that kind of thing. So residual income is not very high. For one individual, it's $591. So basically taxes, insurance, credit card bills, car bill. Hopefully they don't have car and credit card bills. But, you know, hopefully for two people, it's about $996, I think. Okay? Yeah.
What if they have life insurance policies? They're not going to try and collect on that. There's nothing to do.
That's correct. That's correct. Okay? All right? Yes, sir.
Okay, so if you have a reverse mortgage to pay your elderly, put a tax deferment on the property taxes, how does that affect those?
I don't believe you can do that. I believe that's a Texas option. I live in New Mexico. We do not have that option. And I believe the last time I checked into that, that is not approvable. So you cannot do that.
So you cannot do that on a reverse mortgage?
I don't believe so. Okay? I mean, I'd have to do a little bit more research because it's been a year or two ago, but I believe that came up with a client or a customer that I have, and I don't believe that's allowed. FHA and HUD is not going to approve that. Okay? Let's see, I think we covered most of this. Comparing purchase options, you know, you've got a traditional mortgage, all cash, flex options. And if you'd like this presentation or some of this information, I have not sent this to our loan officers yet, okay? But you can contact Randy, Sandy, or Aaron and ask for them if you want some of this information. Some of these specific examples are going to change because I believe the interest rates are going up tomorrow, if I'm not mistaken. Okay? So that's going to change things a little bit. Now, our interest rate's a little different because on the FHA HUD program, it's tied into the yearly treasury bill, and I believe that moved enough last week that it's going to go up. Okay? It's not, it doesn't change every week or every day like conventional rates. Okay? All right, the process of getting a flex mortgage, there is reverse mortgage counseling required. It's very simple. Usually I require that our particular clients, you know, talk to me first, kind of get a rundown explanation of how it goes so they have a pretty basic understanding. They know what the numbers look like based on the estimated appraisal. But counseling is required. Obviously, you need purchase agreements signed by all parties. Loan application can be created. usually what we do, in fact, I have 2 of these going on right now. I still do some personal production because before Guild, I didn't work for the loan officers like I do now. So before Guild, I still established quite a few relationships in New Mexico and the Albuquerque area. And so I've got 2 that are probably going to use that flex payment, because in one particular case it saves them $40,000 and they don't have the $40,000, and the other particular case it saves them close to $60,000. So closed funds, let's see, and the clients moved in. Clients do need to move in within 60 days of the purchase, okay? Or they're going to have to provide some proof that, yes, we will be there within a certain time. Most of our clients will do that pretty close, usually within, as soon as they sign, they're usually in their home within a week or 2, okay? All right, here's why Guild. Took me a little while to put this slide together, okay? And for some reason, I don't have a circular picture of Aaron. I'm not quite sure why. So I didn't put him in a square on purpose, okay? But everybody else, really, I work for these 3 loan officers here. So if you have questions on this product, certainly call them. They may put you right through to me to start with. Or if you have a customer, we can do a 3-way call. We can certainly do plenty of options here, okay? And then I have a refinance example, and that's it. Okay. Other questions on the purchase? Robert?
I do have a question. You mentioned that after the senior or the person living in the home passes away, it does revert back to paying the family. What's the time frame that they have for the heirs to react or to?
Okay, it would be if there's a death involved, it's 6 months from the date the last homeowner. Okay, they can petition up to a year as long as they're communicating with the servicer that they're either trying to sell the home or they're trying to refinance it to get the funds so that they can buy the home.
6 months to a year.
Okay, so we're going to go in. Does anybody have any questions on the purchases? Everybody understand kind of how the purchases work? You're not going to make it. No, these are the FHA. There's 2 products. There's FHA product and there's alternative products out there which have the same characteristics as a reverse mortgage. Okay, but they have different underwriting criteria. You need to have better credit because they're alternative products. They're not pooled and sold with the FHA HUD products. Okay, they're pooled and sold in other markets. So they look at those a little closer. Okay. Let me go into, okay, so we covered the non-recourse. Okay, this can help out with purchases as well. Occasionally you may have some clients that actually do not qualify because they don't have a lot of income. On this particular product, we can convert assets into income. So if they are short income by our calculations, but they have plenty of assets, obviously they're going to use some of those assets for a down payment. So we're going to take the remaining assets, convert it into income, and there's a pretty good chance we could get them qualified. Okay? The what? I'm sorry. Pets. I don't want to make anybody mad. But I know. Let's put it this way: bankable assets where I can get a copy of a net worth or valuation. Okay. Okay. I think we covered those. Let's see. Do I not have the refi? Let me see here. There we go. Okay. On refinances, you're going to run into them every once in a while. You're not going to get paid on them. But there may be some customers out there you can help. Okay? Maybe they're going to come to you and say, hey, listen, I can't afford to stay in my home anymore. But they have a lot of equity in there. Okay? There's a lot of things we can do with people that have a lot of equity. So refinances, again, value of the home, customer's age, or if they're a couple, the youngest age, where the interest rates are. We create a reverse mortgage loan. And the options, let me see if I get that to the full screen. There we go. Maybe? Okay, so I'm not that great at this. Sorry about that. Let me see here. So depending on what their needs are, if they need more money per month, the calculator will calculate a lifetime mortgage payment, depending on what their equity is. Is that going to be helpful to them? It may or may not be. Okay? A lot of times, depending on their age and the value of the home, I've seen lifetime payments as high as $2,000. Okay? $2,000 a month can go pretty far, depending on where their income's at and how much equity they have. If they don't need money per month, they could set it in a line of credit inside the loan itself. If we be managed and serviced by Guild, they could draw money out. At closing, we connect their checking account to the reverse mortgage. So they would fill out a form, contact us, tell us we need this amount of money out of the line of credit, and it would be in their account between 3 and 5 days. Or you could do any combination. Or you could pay off existing mortgages. You have to be very careful about that, because when you do that, you don't want to tell somebody that hey, you're going to eliminate your home mortgage payment, because you still have to pay the taxes and insurance, right? So the principal and interest payment, once you pay that off, it's going to create some cash flow, because they no longer have maybe an $800 principal and interest payment, okay? In this particular case, this is a pretty unique one, because this is a home in the North Valley. Not sure how many of you are familiar with Albuquerque. It's very close to the Corrales area. She had a first and second mortgage with a total balance of $448,000. Her husband passed away 3 years ago, and this was a house that basically he built. They built together, and their kids all grew up in this home. She did not want to leave this home, okay? And so what we were able to, and her combined mortgage payment was $2,400 a month, and her income was only $3,500 a month. So she lasted about as long as she could. This is a referral that came from Century Bank, which happens to be a local bank out of Los Alamos, New Mexico. So basically, we were able to put all this together, pay it off. She now has $2,400 a month in cash flow net that she doesn't have to pay anymore, and a $102,000 line of credit if she needs it, because she had that left over. Okay? The one thing about the non-recourse feature is that if you sign up for that monthly payment that helps, or if you have a line of credit and somewhere down the line that maybe the values of the home go down and the loan amounts already here, you still have access to those monthly payments are going to keep coming, and you still have access to the line of credit, okay? I mean, it's not being taken away just because we happen to know, or the FHA and HUD or whoever it is happens to know that the loan's gone upside down. That was my quick synopsis on refis. I know we're not here for that, but okay. That's a very good one. Right.
Kids got to stay there.
I mean,
Cash flow went up $2,400 a month. No house payment, and it got $102,000 access.
I mean, I'm sure you've all seen this. I mean, you've had customers that are so happy. I mean, she's giving me a hug. And she's in tears. She is so happy.
And we did another one where a lady, if you look at her income was $3,500 a month, and then just her payment mortgage for $2,400. So she's got $1,100 to pay taxes, insurance, utilities, food, subscriptions, So I have one more question. Who's the biggest opponent to the reverse mortgage?
Heirs.
The heirs, right. That's why it's important to get them in front of a professional. Listen to them. Patience a lot. He's been putting up with me all day. So, and he'll explain everything to them and make them feel comfortable because it's the heirs thinking that's their money. And the reality of it is it's not their money. It's their parents' money. They worked really hard all their lives, paid off that house, put those kids through school. They should deserve to live an integrous life. So that's kind of our motto in that stuff. So with that, I'm going to shut up.
Okay. Well, I have one more example. Sandy's still here. So, and this happens to be in El Paso. I don't remember the address. The house is $165,000. Lady's 80 years old, and right now we're talking with her daughter. So I don't happen to speak Spanish, but the daughter translated, and I can catch a few words here and there, but essentially, and I'm not as familiar with, I'm more familiar with Albuquerque, obviously, than El Paso, but it gets hot here. I guess that's been happening a lot lately. So their big thing is she owns the home free and clear. So she's only going to get probably $65,000, something like that. We're going to take the closing costs, no money out of her pocket. The big thing she wants to do is put an air conditioner in. She's 80 years old. The kids are like, she's got to have this. I mean, I don't know how. Swamp coolers don't work very good at 100 degrees. I know that for a fact. But so, it's an example. They're still going to get back to us and see if they want to do us. But, we provided a $15,000 cash out example, and that leaves her $35,000 in the line of credit. She was already on $2,400 a month in income. So technically, she didn't really need the money per month. But the air conditioner is the big thing because she doesn't have any other assets. Other questions?
You mentioned on the flex that they had to certification.
Yes.
What is that?
Well, both of them are reverse mortgage counseling. There's different agencies for the FHA HUD than there is the alternative programs. But basically, what they are is third-party people who are not involved. They get paid a fee. Generally, the ones I would recommend my customers typically go to is usually around 150. Usually it's pushed towards closing, okay, if we've got some economic difficulties. But I've heard it could go up as high as $300 a month, or $300 for the counseling fee, not $300 a month. So I would encourage my customers to call. They're going to review essentially what I'm going to cover. But they may find some things out that either they didn't understand, but it's basically a third-party counseling that's not getting paid directly with the loan.
So we can see like why we're not aware of this.
Correct. And I just have one more question for you. Are you sure it's not the pets protesting about?
No sucker, that's right. Every day.
Okay. All right. If there's not any other questions, I'm happy to, if you have individual questions, I'm going to be here for a little while. There's more food back there. Yes. Okay.
I'm Randy and Sandy, as long as I've been in the real estate business, so anybody that doesn't use GEPAR mortgage, Sandy was my first loan officer when she worked at Rocky Mountain, just a few short years ago. But when I sold Classic American Homes, she was the first loan officer I worked. And I know when she and Randy tell you that loan will make it to closing, 99, well, I think 100% of the time. I've known Randy when she first moved here. She worked for, I think, First American Home Warranty. I know when she had her first baby. He got older, I didn't. Randy is a great loan officer, and so is Sandy. And I really haven't met Aaron. That's why I'm always wishing Sandy and Randy. But I know Aaron, who works at Gale, is probably doing a great job too.
Okay. Thank you so much for that. We appreciate it. Other comments or questions? Okay. I know that I could see it. Yes. Those two states. Used to be Colorado, but I gave up Colorado. So. Okay. There's more food back there. Like I said, if you have personal questions, I'm more than happy to answer any personal questions. But please see our loan officers, Randy, Sandy, and Aaron. for further questions. Okay? Thank you for coming. We really appreciate it. It's a great turnout.
A GEPAR original production.